Hello, everybody. Welcome back to the Prospero.ai stock market live streams. I hope you all had an awesome weekend. We got off to a decent start in the markets today. They tried to go in the green. We are currently drifting back into the red, though, and not too big of a surprise based on the Prospero signals we've been seeing in the Prospero app. Today's date is November 17th, and actually, that date is special to me because it's actually my birthday today. So I appreciate you guys tuning in for the Steven birthday stream here today. Good to see you, JC, in the chat already. How you doing? Hopefully, we're in store for a great week in the markets here. We got a bunch of great topics to go through. George will be tuning into the stream in just a moment. Oh my goodness, I'm actually taking a peek at the Prospero signals right now. The QQQ net option sentiment has jumped up to 37. Wow, that's quite the move for QQQ already today. Very different from the 5 we were getting towards the end of last week. SPY is still at 0. Thanks, Jonathan and JC, for the birthday chats. Appreciate you. Appreciate you guys. All right. I will go through the topics here as we get started of what we have in store for the stream today. We'll be doing the model portfolio at the end as usual. And a little housekeeping. We're only going to have one stream this week, so let's make it a good one. We're going to try and go through a lot of topics today. If you guys have any questions, that will help us even add to the topic. So feel free, whether it's a single stock, business, micro, macro, AI, tech, whatever you want to hear us talk about, we're happy to answer. So let us know in the chats whether you're watching on X or YouTube. We're going to start off with September jobs report that is set to come out on Thursday now. Is this going to matter for the market when it comes out? You know, now this data is like ancient history at this point. We've had a lot of weakness in the market. Will this number either way matter? Will the market react to it? We will discuss that. We've had a lack of trust, faith, or I don't know, momentum in tech at this point now for a decent amount of time. Are we going to start seeing some rotation going on in the markets to different sectors, maybe financials, industrials, healthcare, or when the momentum returns for the bullish market that we're having, will it go right back into tech? We will discuss. Then the big uh, event of the week, the NVIDIA earnings report this Wednesday. We'll break it down, what we're expecting, how it's going to be affecting the market, and whether it's going to be a black and white scenario, whether they report, bearish and the continuation of weakness towards the end of the year. If they report bullish and they beat numbers, will it be a Santa rally and a year-end bullish momentum wave as we close out 2025 here? We will discuss. Jensen Huang had some pretty great comments, if you're an NVIDIA shareholder, about his expectations for chip orders in 2026. But we will take you guys through everything of that story. We have more earnings this week as well. We have a big week for large retail companies. So we have Home Depot, Lowe's, Target, TJX, Walmart, all reporting this week. These stocks don't really, I feel like, move the needle on the bull rally at this point. It's so AI focused, but maybe we can learn something about the consumer based off these reports. So I'll ask George how he is viewing them, if he finds them to be impactful for the market, and which one of those companies he's interested in, if any. We'll also go through Novo Nordisk, which is cutting their prices on their Wegovy and Ozempic drugs. I'll tell you how much they cut them. They're also kicking off a new deal if you're a new user of their product for an even cheaper amount, just in time for the holidays, as we all probably enjoy some extra food. But yeah, we'll go through that story. This area of the market seemed like it had such a bright future with Novo Nordisk, Eli Lilly, and all these companies that were rallying and seemingly had the miracle weight loss drug, and now Novo Nordisk stock has gotten no love. So is it time to buy the dip there? Then an interesting story I want to ask George about. So many stocks have dropped 10, 20, 30, 40%. It's tough to know which ones are interesting by the dips versus which ones have had their peaks and kind of are not going to regain the momentum that they had prior to this weakness. I'm wondering if the stocks that the Trump administration publicly took a stake in, so these are companies like ticker LAC, Intel, INTC, MP Materials, and several others, Are those interesting companies now? Because you'd imagine that they're going to get a lot of support, and the administration will not let those companies, have bad returns for them, I would assume. So we'll see if those are some of the stocks that you want to be looking at even more closely in this market as a lot of stocks have dropped. The future of cars is a topic we've wanted to get to for a few streams now. I think we're finally going to get there today. I'm comparing the future of the car industry to smartphones. We've seen smartphones, in the USA and China kind of become isolated. So in the USA, you have Google and Apple, American companies with the phones. In China, you have Huawei and others. I'm wondering if, as cars implement more technology, especially self-driving, you need to have such a trust in that tech. I'm wondering if it's going to happen in the car industry as well, where USA car companies will kind of be the only cars on the road in the future, and in China the same way, which would be, Tesla has a big China business, and um, a lot of cars are more overseas now. So it'll be interesting to hear his thoughts on that. Then we have a topic about one of the companies that was a long in our newsletter from yesterday, and another topic about a company that was a short in our newsletter yesterday. So we have ASTS that is, I believe, holding up slightly better. Let me actually take a look at it than a lot of companies that have kind of plummeted. Let's see though. Actually, they're down 5% today. Maybe not so much. It's a good day to see if they're worth buying the dip on, I guess. So the story today is that I don't know how we have a lot of probably Twitter viewers watching right now. You guys probably know the account, the long-term investor, pretty big account on Twitter, pretty respected voice. He tweeted about, and obviously ASTS has looked good in our signals, and we have it as a long right now, that ASTS was the most agreed upon company that's relatively small at the moment, that investors that he's speaking to they believe it has a chance to become $1 trillion company one day. So do we agree with him? Do we think that's the ceiling for the company? And how quickly can it get there? If so, we will answer all those questions. Now, on the short side of things, I wanted to bring up MSTR on the stream today because their stock, let's take a look at them as well now, has not been doing well recently. I think they fell under the $200 level. Yes, they're at 193 right now, down 3% today, now down 35% year to date. But what's interesting to MSTR for me is that it seems like day after day, they just continue to buy more and more Bitcoin, regardless of what the stock does and regardless of their underlying business, their other side of their business where they sell like software. Um, I'm wondering if this is putting a target on their back. And if you guys have heard of the term like a honeypot before, um, I'm wondering if like forces of the market will be looking at MSTR and knowing that if there's pressure on any kind of like liquidity situation with them, there will be a ton of cheap Bitcoin most likely coming to the market. And if that puts a target on them for people trying to put pressure on MSTR stock and the price of Bitcoin, and maybe if that's what some of the weakness we're picking up in our signals. So we've compared Coinbase and MSTR recently, and Coinbase has looked like the clear choice over MSTR. And I know we have it as a short right now, so I want to look at the signals. Only a 46 upside with a 40 downside for MSTR and only a 40 net options sentiment. So not a lot of positivity going on there. Only a 30 growth too. Yeah, so the signals don't look great in Prospero, but we will talk about that in just a bit. And last but not least, here today on the stream, before we do the model portfolio at the end, where we make live switches, adds and drops in the model portfolio that has outperformed the market quite a bit. I believe about 27% at this point now this year, and around 50% on average over the past couple of years. Before we get into that, I'm going to ask George. We shared a note in our newsletter about how difficult the market has been this year, specifically recently. I think I saw Renaissance Technologies was down 14% in October, or maybe for the year now. Either way, they're underperforming the market quite a bit in 2025. I want to ask George, what are the lessons he's learned this year managing in this market, and how can we be better going forward from it as investors as we turn to 2026 and we got a new shot to outperform the market for another year? I'm sure there's a lot of lessons he can share about the trading and investing in the market this year that we can take with us going forward, and all become better because of it. I see Dr. Carter is in the house reposting the stream. Appreciate you for the repost. We got to get a lot of viewers here today. This is going to be our only stream of the week. If anybody's watching who's new, please follow us on X, subscribe to us on YouTube. Love doing the streams. Hopefully they provide some value for all of you. Normally we go live Mondays at 11 a.m. and Wednesdays at 3 p.m. This week, this is our only stream today. I'm not sure what our schedule will be next week. Next week is Thanksgiving, right? Yes. So I don't know if there will be switches next week, but could everybody follow the or subscribe to the Prospero newsletters as well. You'll hear there first what our schedule will be. Let's take a look now at how the market is performing today. We are seeing the QQQ now down about 1/3% today. SPY and Dow the same. Russell is down about 0.75% here. So all of the indices are in the red at this point. After there was trying to be a little bit of a buy the dip opening today, it seemed like. The gains are being faded at the moment. Let's take a look at the Magnificent Seven stocks, see how we are moving here today. It looks like Google is the only one still in the green. Oh, no, Tesla is in the green as well. Actually, I didn't even look at NVIDIA. Maybe I spoke too soon. Check out NVIDIA as well. Nope, NVIDIA is in the red about 2%. So Google and Tesla in the green today. They are the only Mag 7 stocks up right now. Google obviously has that Berkshire Hathaway story that we'll be getting into in just a bit. Gilbert's in the stream. Hello, Gilbert. Gilbert saying good morning. Good morning, Gilbert. Good to see you here today. All right, so we're just, perfect timing. Perfect timing. Look at that. We got this down to a science now, everybody. George has just tuned in. Hello, George. Welcome to the stream today. Good to see you. Man, it looked like we were trying to have a bit of a buy the dip opening here today, George, but that didn't last too long. So I guess that tells you all you need to know about how much bullishness there is in the market at this current point in time. We did look at the Prospero signals, and it does look like QQQ is trying to make a bit of a recovery here. It's at 28 right now. So it's a little bit higher from the levels it was at towards the end of last week as we open up here today. SPY is still at 0. All of the indices are now down in the red after I think each one of them opened up in the green. So a definite fade of any rally attempt so far today. I saw in the newsletter, currently we're at 5 longs, 10 shorts. So that tells you all you need to know about how we're feeling about the market. What do you want to share about how you positioned us over the weekend and the action you're seeing so far in this brief time the market's been open today?
Yeah, I mean, sorry, 1 second. To me, it was pretty clear. Like I was looking at it, it's just we're seeing what we see today. Like even when we get a little bit of a move, we can't sustain it. So yeah, I mean, definitely has me concerned.
I'm wondering, since there's been, the government is now reopened and we're going to get our first bit of data this Thursday, the September jobs report, so 2 months old data is going to come out this Thursday. How much do you think the market will be reacting to data that is now almost ancient history, it seems like, in the way the market moves? Do you think if it's like super bullish number, the market will even react bullishly, or if it's super bearish, the market will react? Or do you think it's just all factored in at this point and the market's going to overlook it?
I think it's so complicated given the fact that we don't really know. We don't really know how people are going to react based on like a positive jobs number to like how it's going to look for interest rates, with the markets looking like it really needs cuts more and more. So I think with this market especially, it's so volatile that we can't really look at this stuff or expect like, a one-to-one like kind of simple situation here. I think it's complicated. I think it's going to be complicated.
I mean, that point of how you're saying it's complicated was never clearer than in our newsletter when we shared how Renaissance technology performed in October. And yeah, just I want to get like a temperature check of like, do you think the market is kind of like weighing out people on this point? Do you think people are going to like drop from the market, or just I don't know, with the way it's performed recently, it seems like even the best of investors in the market have struggled. So I don't like what do you think is going to happen because of this? Do you think people will adapt or will they quit? How do you feel about that?
Well, this is why, the hope is that we train people properly, right? I think that that's why I'm starting to emphasize more. I normally say that uh, if you're comfortable, you should start to learn more how to short, right? And that's why we tell people, because in some markets, like in order to make money, you do need comfort shorting. And I hope people have been picking up the skills as I'm suggesting in safer ways, understanding the mechanisms, so they can, actually uh, perhaps make money if there's an extended bear run. But yeah, I mean, we even saw it with Renaissance Technologies. We saw it with Michael Burry, and we talked about it. I mean, the Burry situation continues to be very weird. Um, but yeah, we seeing Renaissance get something so wrong, it's curious to think about what they were seeing, like what made them so certain. Like obviously the market is down this month, so they were right. They were just a little early, but to lose that much relative to what they normally do as good risk managers, it really makes you wonder what they're seeing, and it makes you wonder what everyone's seeing now, because I don't see much difference. Like eventually I coalesced and stopped, aggressively risk managing, every time there was a problem with SPY or QQ unit option sentiment, because it could turn around as it did today. But other than the jobs thing, maybe this like capex, like depreciation of chip assets that people are now talking about more. Um, yeah, I don't really know. Uh, I don't really know what is scary. Like you can't really put your finger on. Like normally there's like a catalyst, right? But we're in this weird situation where the market was going up in the face of all the same catalysts, that the negative catalysts that people were saying they're concerned about. Concerned about a correction for XYZ reasons, but it kept on going. So I'd say that that's the most. That's why it's feeling so difficult for even the pros, because you look at this market, it has all the same risks that it has had as we were hitting new all-time highs. And there hasn't been, like, sometimes you say, yeah, it has all the same risks, but there's some new catalyst where you're like, okay, that pushed everybody over the edge. We can't really point to what that new catalyst. Maybe that new catalyst could be that the labor secretary was fired, and people are concerned that we're not getting real numbers, or we're not going to see the real numbers, and people are going to pay the piper. Like that could be it. But again, there's not that singular event that we can point to, and I think that's what makes it hard, because when people are reacting to an event, you can say, okay, if we see XYZ things happen, we're on the other side of the event. But people don't seem to be reacting to event. It seems to be just like all of these general concerns that people didn't care about for a while, now they do. So yeah, it's an interesting situation, but also a pretty dangerous one.
Do you think if/when the bullishness returns to the market, that there will be any kind of rotation into different sectors? We've seen tech now for decades, but really the last like year or two with the AI rally becomes such a focus of where investors are putting their money. Even when like other sectors really haven't really, like healthcare dropped a lot, financials, industrials. Do you think any sector that kind of underperformed can catch up in not like the short term, more like months to year forward, and kind of be the leader of where people are putting their money? Or no, people will go right back into the tech when the market gets the bullishness again?
Look, I mean, NBIS is rallying again today. That's been one of the hardest hit stocks. I mean, I wish I maybe, held that one as opposed to some other ones, because that was the one that I'm like, I think most bullish on from a structural perspective. I think that's what makes this market so tough. We were like debating some people who were talking about like in our trading letter that our 27% returns were not, he could buy single stocks and do better. And one of the things that came up was he was basically preaching like, Charlie Munger style value investing, and I just don't think that's the right situation for now, right? Because I think either you're buying value and that's just like not going to get hit as hard as tech, or the market shakes this off too, and tech's going to do well better than value. So I don't think value is a good half measure. I think either you need to be prepared to go to cash, or be prepared to short the market, or you still believe we're in the buy to the dip market and you're still owning your tech. Those are the only two scenarios that I think make sense. I don't think going to value makes sense. I mean, the other thing that I said that I think is super important is a lot of people, like when I realize I might not say this enough, but when I tutor people one-on-one, a lot of the time I'm saying like, you should actually have maybe like 50% of your portfolio in, something like Schwab dividend, just to make sure that you're, earning income even now, and you're not subject to the volatility. So I think instead of value, you should go safer than value. I mean, maybe people call dividends value the same thing, but yeah, I think there's much better ways to position your portfolio than in like single stock value names.
We got a comment from Gilbert looking at an intriguing intraday dip for Google right now. And it's awesome that you brought up Google, because I wanted to bring up the topic of how Berkshire Hathaway revealed that they took a multi-billion-dollar position in Google, about 4.3 billion actually, and it's their 10th largest holding at the moment. And we know how long-term Buffett and Berkshire are, so I'd imagine them beginning this big stake in Google is just the start. But my question is this Buffett picking who he thinks is going to be the winner of AI? And we saw Google react very positively when this news was announced on Friday. If not that reason, do you think it's just how Google trades a little bit cheaper than its tech counterparts? And how much of a boost do you give this position by Berkshire for Google?
I definitely don't think it's Buffett thinking they're going to win in AI. That's not how Buffett thinks about things. I think it's definitely the first thing you said. It's like it's trading at a discount relative to Apple on a PE basis. I think it's that. But I think, like, if you look at the substitution, especially on AI, like Apple wasn't his AI play. I'd venture to say he didn't really have a quote unquote AI play. That's not really his thing. I think he probably thinks AI is overvalued. But I do think this is a shift in that I think he thinks Google's business is safer than Apple's business. And there's the valuation, and there's that, like, Apple used to be, like, to a lot of people, including him, this like stable growth company that continued to come out with new ideas. I do think that that's what Google is now, right? It's a stable growth company that continues to come up with new ideas. Apple isn't that anymore. I mean, you can't even count on growth. Google, you can't count on growth, and you can count on some innovation. I've been a little critical. Like, I do think they've caught up with Gemini a little bit, and I do think we've yet to see what like a deep mind technology can do as this evolves. Now, I'll also say that they've probably like had OpenAI catch up a lot in terms of like also having like a deep mind type technology. But Uh, yeah, we don't know what they're doing. It could be more competitive. I do still think they've worked on that for a long time. I do think DeepMind was like a really unique company in terms of the way they set things up and built technology, and obviously they built out that research division more. But I do think Google is still making innovations, and also we see things like the YouTube acquisition, right? I do think they're good in being opportunistic with their acquisitions. That isn't really as much Apple's thing. Like I think they do make acquisitions, but they're normally not necessarily as big as that. So yeah, I do think Google is kind of the new Apple in also the sense that I don't think you could expect explosive growth from Google anymore, but that's kind of the double-edged sword of value investing. Because you can't really expect explosive growth from Google anymore, that's what's created the value.
So I'm really starting to wonder, like, especially as the new interfaces of tech come to fruition, like how Meta's working on the glasses. Obviously, longer term, there's like things like Neuralink, and like, has it actually peaked? Like, I know we've said it kind of a lot, and it's never really felt like it to me because like I have all Apple products and they dominate everything. But is their business only going to like wither from here and not grow? Like, especially we haven't seen them launch any new products. And if a new product does come along, like a glasses that actually is like super cool and everybody starts adopting it, will Apple be able to launch a version that's competitive, or will they just lose, users of their products gradually?
Yeah, but I mean, just because a product is ubiquitous doesn't mean that it's not like I don't think Apple's Sony by any means. But at some point, everybody owned a Walkman, right? Everybody owned a Discman. That was their thing. So it was like, I mean, that was probably like 20 years, right? That they like, you didn't even necessarily know same kind of thing. Like the Discman is like the iPhone. Like you just went on a name, you knew, you didn't have to know it was Apple. Everybody, I mean, I don't know how many people necessarily knew it was Sony, but their logo was all over those things. So like, yeah, like being an obvious product that everything is around, and I mean, like that doesn't necessarily mean that you have a promising future as a company, or you could be on, ultimately on the downswing. I do think Apple as a brand still has a lot going for it. That's why I don't think it's Sony. I think Apple as a brand has a lot more going for it than the products themselves. I mean, the thing that gets me closer and closer to like, but I'm not going to do it because I'm like, I want a blue message and all that stuff, and I'm just used to this stuff. The thing that gets me closer and closer is I need another new phone. Like it's like probably been 2 years, and it's just like this thing is getting slower and slower, and it's just like it's annoying to just have to replace something like, and the battery's getting worse and worse. And I've been through this before. It's just like it's annoying how obvious they make it that like these are the kinds of like gimmicks that they need. Like other companies, other products, they can rest on the fact that they would like release. I'm thinking of like something like Nintendo, where your thing doesn't break, but Nintendo's ran forever, right? But you wanted the new model, right? That's why you bought it, not because you had to. And I think that's like probably the annoying thing about Apple. I don't think I don't think it's anytime soon that we're gonna see them change. But yeah, I think that let's see. It seems like Apple's product market has been stronger. Yeah, no, I agree. Like they kind of, I think if I remember earlier iPhones, there was always like some big new thing. And now it's like we've added a third, like a third camera, or you can use your I guess the face opening thing was kind of cool, but I like these last models. I can't really name what the exciting innovation was.
Yeah, I feel I don't know. Like I am somebody who has a MacBook, an iPhone, AirPods, and I'm not looking to switch away. So I think Apple's safe as long as no other company launches like a revolutionary product, that would draw people from switching. Because it seems like they're kind of maybe we're ripping on Apple, but maybe it's the whole field is kind of like not innovating the way it used to in terms of like wearable tech.
No, I think like other than the fact that like they don't seem to be innovating themselves. Well, I think OpenAI, didn't they acquire like Johnny Ives, like very interesting. I like that's the thing that kind of is like an existential threat. I do feel like we're not going to be on phones forever. Like I do feel like there's a better way coming. It might be like a neural interface. It might be like a holographic thing. I don't think we got to find out what Johnny Ives thing was. But yeah, there's just I think to put it all in a box on Apple, like what it is for me is just I I don't trust them to have the innovation anymore. I think that's my big thing. Um, and there is going to be like it's those two things together. I do think we're in a period within like maybe in the next 5 years we are going to have a big in like interface move forward in some capacity, and I no longer trust them to be that innovator.
Well, I'm wondering if you trust this next company to be that because we have a major event this week and it's Nvidia earnings this Wednesday. And I'm wondering if, like, one way or the other, if they beat numbers and it's, Nvidia stocks reacts bullishly, if that's going to spur on the year-end rally, Santa rally, or if they miss numbers, if that's just going to, lead to further weakness and maybe a larger decline. It's interesting to put in perspective of the fact that like we've been doing these streams for a couple of years now. This earnings is now on top of like 2 years of crazy growth. So if they're still growing like tens of percents, I don't know what the expectation is of what they're expected to grow, but it's on top of 2 years in a row of insane growth. So it just they've come such a long way. But I know recently we've been seeing some lower net option sentiment numbers. Are you feeling any way about Nvidia at the moment? Are they interesting to you at all heading into this report?
Um, I just checked; they were back up to 86 net option sentiment. Um, but they've been running low. I'm interested to see if this holds into earnings. I mean, even 86 is not exciting. Like, given what the market's doing, is not really exciting enough for me to play Nvidia earnings. But yeah, I mean, I think it's hard to not be concerned about what's going on. I'm definitely wondering what's going on here. I'm wondering. I'm wondering if like somebody knows something. I wonder if I don't know how much inventory they have, but that's actually an interesting question for the AI. I'm asked how much chip
Nick is asking, at what point do overall red days become a market correction? I'm pretty sure 10% from all-time highs is a correction,
how
if I'm not
much chip
mistaken.
inventory? I mean, I think we're probably already there, but it's been a little wobbly. What is the average age of that inventory? Okay, we're putting perplexity on it because this has come up a few times, but yeah, I think there's something brewing. It's what we were talking about at the top. Like, and I don't know if Nvidia is going to like. I mean, if it's Burry's thesis, it I actually think Nvidia might be the one to break the story, right? I don't. Meta doesn't strike me as a particularly forthcoming company. I think they'd much rather kick the can down the road. Um, I think Nvidia is probably the company that is, and maybe that's why Burry included them. I think they're probably the company that, if it needed to be done, if it needed to mark down, I think they're the most likely rip the band-aid off company, in my estimation. So I guess we'll see. Definitely a developing story. And I don't know, like, it's just this thing now where I think more than anything, I mean, I don't know, maybe some people want to say in the comments, but I do notice it's retail investors are just like this war on them. I'm guessing they took some pretty heavy losses too. I don't know who's winning, and this is the value, and I think the value investors are finally winning the last couple of months after losing for many years. That's probably what we're looking at, but I'm definitely seeing a palpable change in the confidence in the retail market. And if you're seeing a palpable change and retail was driving the market up, it stands to reason that we could really see it decline.
Now, I would imagine that would be a bad sign for Robinhood. I remember you saying about like when the market had some bearishness, that would probably really draw on their, revenue and earnings with people cutting back on trading and even lack of retail interest. Would that be a stock you'd be getting nervous about with what you're saying now?
Yeah, definitely.
Something I'm also curious about hearing your opinion on is, since so many stocks have dropped, and if you've been wanting to buy in some of these companies, they're getting interesting probably to people who are looking to take long-term positions, but it's tough to find, like sift through all of the ones that have dropped. Are you interested at all in positions in companies that the Trump administration has taken stakes in? These companies include Intel, MP Materials, Lithium Americas, and Trilogy Metals, and also U.S. Steel Corporation. So there's been five. I would imagine that the Trump administration is not going to want to have poor performance or bad returns on the companies that they've taken stakes in, so that this would give them a much stronger floor and ability to recover. But does that like leap them over other stocks for you, or no? They're just still the same as a lot of the stocks that have dropped.
I mean, I don't know. Like, I don't know how it relates, especially to the broader market, right? Because, like, I don't think the Trump administration wants anything to go down, right? So, I mean, the question is, what do they, if they can pull levers? Like, I think to me, if they were concerned, we'd probably, and the market kept going down, I think we'd probably see something, happen with rates. We've already seen some of the tariffs pulled back. I mean, there's different levers that they can pull. I mean, they might also make those payments, right? I think if people got those payments, like a lot of people did use those payments to buy stocks, right? I think that's a familiar thing. So there's lots of different ways they can stimulate. I do think it's a double-edged sword, right? You could say, okay, they don't want those stocks to go down, but I think they also don't want to look like these companies need them. They were buying them because they thought that they were good investments, right? I don't think they would also want to necessarily send the message that the companies needed them. But I think it's certainly on the table. I mean, I think, like, if I had to put my money on something, I would say they would invest in more companies before they went back to invest in the other ones, unless some of the other, like, unless one of the ones they've invested in, which I don't think so, was actually in economic trouble. But yeah, it's going to be interesting.
All right, I want to make a prediction, and I want you to either rip it to shreds and disagree with me, or agree. We'll see. We'll see how you think. But okay, so this is a topic that's been pushed back a few streams, so I'm excited to finally get to this discussion of the future of cars. So I'm wondering if the future of the car industry is headed to where the phone industry is at today, where, since phones have all of our personal data and it's like you need a high level of trust in it, it's become where, iPhone and Google dominate USA. Basically, American phone companies are in America, Chinese phone companies are in China with Huawei and others. I'm wondering if, as cars implement more technology with self-driving data, and obviously any crash or any type of hacking ability will be like so scrutinized, if that is destined to become the same as where phones are, where the higher level of tech, the more trust you need, that American car companies will basically be all of the cars sold in the future in America and on the roads, and the same in China as well. This would obviously affect companies like Tesla, Ford, GM. Tesla kind of both ways, being an American company, but also a large China business. But how do you feel about that? Do you think the car industry could become more like centralized within the countries that the companies are in?
I mean, does it go both ways? I mean, a lot of people like in China have iPhones, I think, right? I don't know if they're as popular, but
I guess it's more of the America side of things then, like Huawei phones are banned and all of that.
yeah, I mean, it's an interesting question. I think it's not exactly the same because everybody's putting like their text messages and things like that. Like, I mean, do we sell like Chinese refrigerators? Like, I don't know. Like, because like any device that's a smart device could just as easily have like a listening thing as a car, right? So it's like, I don't know, there's probably like Chinese like washing machines or something. And I would consider that closer to a car than a phone because a phone we're straight up like putting in personal text communications, right? Like a car doesn't necessarily like it can connect to your phone, I guess, but that's not something that's like required. So yeah, I would put a car like actually somewhere in between like a refrigerator and a phone, which means I don't think we really know. I think a really good example, we still buy Chinese TVs, right? I think that that's a good one. And I think at one point they were like, these TVs are spying on us. And that was a thing. And then people were like, well, we're still buying them, because they're cheap and that makes us happy. So I think cars, like, I think it's an interesting question because a car is a little, because you can like connect your phone to it. And like it might be a bit different. But I forgot that Netflix show where like China was like commandeering the cars as like, part of like they attacked the US.
Black Mirror?
What?
Was it Black Mirror?
No, it was like a movie. If anyone knows, call it out. But anyway, part of it was like they were commandeering these electric cars. I think that there were Chinese electric cars and they were like running them at people. That was like part of their attack. And I actually think that is perhaps the more interesting, not the data part, but a phone could explode, I guess, and that could like hurt someone. But I think that is where I'm at as I talk through this, that part of it is actually more dangerous. The fact that like they could ultimately control these cars, and they could use them as weapons. You could assassinate someone with a car. Or you can assassinate someone that's taking a Chinese car in a car. So I actually think from that perspective, we could see these things locked down more.
While we were chatting about that, JC shared that the QQQ, I believe, NOS is up to 40, so right on the bull bear line now. How long will you need to see the net option sentiment recover to feel better about it? Like if it stays at this higher level today, will you be a little bit more interested in tech even by the end of today?
I don't know. I think I'm comfortable where I'm at. Like maybe at the end of the day, or like I'll look at changing it up a bit. But I think I'm pretty comfortable where I'm at.
Especially with
Yeah.
Nvidia earnings Wednesday, I feel like.
Yeah, I mean, I might. The only thing I would do, I mean, if there's any like shorts or long that look to be a really good opportunity, I might adjust. But I'm more inclined. Yeah, SPY still at 0. I'm more inclined to, if I do anything, maybe de-risk. Like I wanted to start off the week with a bit of a broader portfolio because I didn't really know how the market was going to start. So I think I might reduce a bit if I do anything.
Well, I do want to ask you actually about a company that was long in our newsletter and one that was short. So we'll begin with the long company. That is ASTS. And I wanted to ask you about this company. The people who are tuning into the stream on X probably know the account, the Long Term Investor, a big Twitter account that focuses on the market. He shared that in his conversations with his peers, investors, people he respects, that ASTS is the company that they consistently agree to that has the highest potential of being $1 trillion company one day amongst the smaller companies at this point. It's always looked good in their signals in Prospero recently. You've added them long. Do you agree that the ceiling of this company is that high? And I mean, that would be, I think I looked at like a $25 billion market cap. So that'd be quite the move over the coming years, if so.
Yeah, I mean, I think it has huge potential. It's like one of those things that it looks good in the signals, but also intellectually they've gotten to a place in their business that's just it's very exciting. It's hard to deny. So what does that mean? I think what it means is like there's a launch next month. And I think that's why we're holding, like it looked a little softer in the signals at times, but we've seen it go off. Like we've seen it really rise, like leading up to a launch, and even like after a successful launch, just going bonkers. So I think that's one of the reasons that we've really pushed ourselves on this, because we don't want to miss like the run up as it starts running up for the launch. But we might, if the market continues to soften, the signal soften, we might get out and then look for it, look for another opportunity to get back in. But, I have a hard time seeing it now, regardless of what's going on in the market, as we get closer to that launch date, not having in like, let's just verify what that launch date is.
As you're typing, I'm wondering if this could be like a buy the rumor, sell the news type event, or if you think it won't act that way.
The second week of December on an Indian rocket. Yeah. Second week of December. Hasn't been locked in. We probably have okay. Okay, so NVIDIA holds 10.8 billion in total inventory. Full year. Yeah. Yeah. 86 days inventory is 86 days. So, yeah. 80, 90 days. Yeah, we're not talking about like that stuff isn't aging very well. So there goes that like worry for earnings.
And just with that ASTS date coming up, do you think it's possible to run up and sell the news, or it depends on how the launch goes, I guess, of whether it's successful or not?
Yeah, no, I mean, leading into it, we've seen it run up a lot. So that's why I'm just like, what's tough with these kinds of things is you're just like, okay, like before the launch, but how far before the launch? Because people are saying like, oh, I might buy a few weeks before the launch before other people get in before the launch. And, then those people might like, but that's why I'm saying like, if the market continues to soften, like I'll get out of it. But we do see like in the chart, we see some resilience. Today is not quite, I mean, and it's actually looking, today it looks like it. So I had a big run up starting at a low of 57, 58. Yeah, I mean, if it gets below 57, I think it's time to say goodbye for now.
I definitely want to answer Nick's question because I think it's a good one. He's asking, how do you transition, if at all, from actively managing your portfolio, and then if you're going on vacation for multiple weeks, to, I guess, more laid back, passive managing of it?
So the nice thing for like you guys that I can't do because I can't assume execution, I can't really use stops, like because I have to be fair. If the market's used like moving really fast, like I can't just be like, oh well, I had a stop at like $26, and the reality is I wouldn't be able to get out. Like I would get out at like 50 cents or a dollar more than that. So we don't do things like stops to be honest, because that's cutting corners, in my estimation. But the other side is like, I actually think if you're going on vacation, you should put stops in and actually relax and like look at the market and see. And I mean, if you want, in addition to the stops, to uh, to check and see like, okay, what's the market doing? How's that? You could also put like limit buys, if you want to say like get into a stock that you've been watching and you want it at a certain level. All those are good. I wouldn't really do the limit buy thing right now, especially with the way the market's going. If something's going like what do you think is a typical good price might not be a good price now. But um I would definitely have stops. And then I'm trying to go through this in my head. You could also do a limit. You could also buy. I'm struggling to think of the mechanism. I actually struggle with this sometimes. But basically, if SQQQ went above a certain price, you could also do that if you just wanted an added layer of security. You should not buy with 10 to 30% shorts. I don't know what that means.
Neil, you could add some more details, and we'll be happy to get to that question as well. George, I do.
I think he might be like he might be talking about the market. Yeah, I don't know.
I
No, but
also
I'm actually talking about buying, like setting, like buying SQQQ if it goes above a certain price, just to give yourself added, like basically added insurance.
Mhm. I want to ask you about one of the stocks that was a short in the newsletter. That is MSTR. Neil said you cannot buy in the market.
I still don't know what that means.
Um, we'll move on to the MSTR topic for now because I see Bitcoin is red about 1% today, and news came out that MSTR was buying about 800 million or so dollars more worth of Bitcoin today, looking pretty bad in our signals and also short for us. I'm wondering if MSTR has become like a honeypot for people who want access to cheap Bitcoin, especially as they just seemingly week after week continue to buy more. If people want to put pressure on them, if they're leveraged at all to have to make them sell, get a big liquidation event, get some cheap Bitcoin, is that some of the reasons why you think we're seeing bad signals for them? And is that one of the major risks for this company, especially as they just keep adding more Bitcoin?
Yeah, I'm referring to actually specifically, like normally I would say like buy if it gets to, like if it goes down to this price. But I'm actually now saying, in this market, if you want to go on vacation, I might actually buy SQQQ because that's a bet that it's going to go down. I might actually buy SQQQ if it crosses a certain price. That way, you're buying, like it's some extra insurance on a long portfolio in addition, to stops. And if you don't want to stop out, that could be just an option overall. Like you could buy a decent chunk of SQQQ if it went above a certain price and not worry about selling your longs. I think in this market, those are the best two options. In terms of MSTR, I think what happened today, is it rallied on the news, and I think sometimes MSTR buys Bitcoin to stimulate the market because there's a positive reaction. But I think we're seeing what this like what's going on in this market, which is that like that wasn't enough to stimulate it. And I think that's a concern. And MSTR is not a stock I would expect to see low in momentum score. That was like a big, additional signal to me about how unhealthy this market is. And it's a definite concern.
Yeah, so we'll have to keep our eyes. I'm wondering if the price of Bitcoin, how much it ties into like MSTR's bear case, especially as like it seems like so far the more Bitcoin drops, the more they buy. But is there a point where that's no longer, sustainable? And we'll have to wait and see. Bitcoin's down to like the low 90,000 range now, so we'll see if they get tested if it drops any more from here. I have a few more topics to go through on the stream today. I just want to thank everybody that's tuned in already so far. We've had close to 2,500 people between X and YouTube here on the stream today, so appreciate you all. Everybody, if you enjoyed the topic so far, you could drop a like. It helps us out, growing the channel, getting in those Twitter and YouTube algos. Appreciate you all. Follow, subscribe. Thank you for being here. I also want to ask you about an industry, a sector, the weight loss drug space that was, it seemed like the golden egg of the market for a bit, but not recently. And now Novo Nordisk has actually cut their prices for Wegovy and Ozempic from $499 to $349. And they're also adding a 2-month starter trial of just $199 per month for new users, right in time for the holidays, for everybody who's going to be binging on some good food over the next couple of months. The stock has been terrible. Are you interested at all in like companies like this? Do you think that weight loss drug craze was just that, a craze, or is this going to like recover and be a sustainable business for Novo Nordisk and also Eli Lilly? But they've held up much better. But how do you feel about that space?
Well, I think drugs like these, like there's a limited market because even if they lower the price, like a vast majority of the country, unless they get it covered in insurance, which I don't think they will. But that's the big caveat. That's obviously expands the market. I think there's a lot of people that if it was free would do it a lot more. But I think we're probably seeing some saturation in the people that actually like have the means to do it and want to do it. And maybe there'll be some repeats. Maybe people will lose weight and develop better habits. But yeah, I do think that that probably a lot of people that wanted to do it have now done it, and then some percentage of those people are going to continue, and some are going to be reduced. So it's challenging to continue to find new people when, like, I don't think what was it before? Like, I don't think reducing it, say like $50 or $100. That's really like I don't think the people that are willing to do it, like that much money was their barrier to entry. I think they need to make it a lot lower to get, more people that just like have that amount of money. Like, because if you think about it, it is kind of crazy to say that, like, some people might, struggle to put food on the table, but they're gonna actually spend money on that. So I do think the market's limited. I am concerned about those companies. I don't love them to begin with. But yeah, I think it'll be interesting to keep following.
I feel like this situation with Novo is a reminder of like not to get caught up sometimes. Like I remember back when that stock was rising each day and it had the momentum, headlines would come out of projections of the weight loss drug markets and how much they're going to grow and how much they've grown so far. And none of them seem like they're really going to come true. And it seems like sometimes the market can get caught up in a story. What's that saying? It's like, don't let the facts get in front of a good story or something like that. Like that seems like the situation that was kind of happening there. I'm also kind of wondering, we were talking in the beginning of the stream how difficult the market has been, especially recently. What are some of your takeaways of managing a portfolio that has still beat the market so far this year? Some things that maybe you either learned this year or the market reminded you of this year, that you're going to take with you into 2026 and beyond in your investing and trading?
Yeah, I mean, some people are 27% beat of the market is not good enough for them, but I'm pretty proud of that number. All things considered, I wouldn't have liked to have that 1 week where we went down from like 66 to 30%, which this late in the year is a crazy number. We really had to do very badly that week. But yeah, I mean, my big takeaways are, I got away from protecting the downside because it was the buy the dip market. And I think that there's kind of pressures both ways, right? Where, sometimes, when everybody's doing really well, like I feel more pressure to take on a little more risk. Just because we have to stay competitive with people in their own portfolios, and if everybody's doing super well, it does make me feel some pressure to be like, okay, I got to take on more risk. I do want to keep up, but I think tuning out that noise is a big lesson. Like, had I just stuck with my risk management practices, that lost me a little earlier in the year when other people were gaining, and I was like, okay, maybe I need to be a little more aggressive. But yeah, had I just stuck with that, it would have worked well, in that, in those, weeks when us, a lot of hedge funds lost a lot of ground. So I think I have to stick to my guns more. And I think everybody should, when you have a process that works, and not necessarily look around as much. But it's always a good lesson to learn. I think the other thing, and it's nice to have kind of these debates with people sometimes, because I definitely logic my way through, where it's just I either want to be, until this resolves, I either want to be more short than long and kind of playing the downside, or if I'm more confident in the upside, I'll get a little more growth in my portfolio and kind of hedge the downside. So just be more comfortable with maybe not making as big of gains until this has stabilized more, and just be like this week, I built a portfolio that I didn't necessarily would make big gains, but I did think if things went right, we would be well hedged, and we could make back some ground, and we're kind of treading water today. So it's kind of exactly where some of the high growth longs that I said, if the market continue, wouldn't do well. They're not doing well, but that's being balanced out with a larger stable of shorts that maybe aren't going down as much. But yeah, I think we added both Friday and over the weekend, we added 8 stocks. They're all wins. So I think that that was what we were doing by design. And yeah, we might look to switch out of that a little bit, but we're also just comfortable with the idea that that I think I'm comfortable just until we get more clarity on which way this market wants to go. Then I think that's just the right way to play it.
I think the first point you mentioned is so crucial, and it's kind of resisting the urge of FOMO really in the markets, and trusting your process instead of getting in this cycle of chasing where the market has been. I feel like sometimes people do. You want to be like where the market's going, and not every investor has a different strategy, and not every strategy is going to work in every market environment. So you kind of have to stick to what you feel good with and what you believe, instead of chasing where the market kind of was. You got to chase where the puck is going. And I think that's important for viewers to remember. That's a good point to remind them of.
Yeah, and we had it both ways, in the way that we warn against sometimes, and nobody's perfect. Sometimes the market will throw you curveballs, make you feel settled when you shouldn't, and that very taking on more risk sent us above 100% in the market, the latest we've ever been in the year. But getting too comfortable can bite you, and I know a lot of people I think you said it. Some people are, getting a little discouraged, and it's hard. But you got to stick with a process, And yeah, like I said, if there's one takeaway I think I want everybody to take from this live is that it is time to paper trade, and learn, shorts, learn, make it a part of your system, um, to look at inverse ETFs. um, I really think that, if you are not taking the possibility of a larger, correction seriously, and just going through the paces, I'm not saying short the market a bunch right now. I don't necessarily think it's time for that. We are seeing some resilience in QQQ net option sentiment, that kind of thing, for example. But we do need, I would say I would like, sharpen your tools, paper trade, figure out what shorting looks like, figure out like, okay, this is my mix of my longs that I like. What kind of portfolio do I need on the other side to balance it on a day like today? Getting those reps. So if it does get worse, you're ready. Same kind of mechanisms, what it means to put like, a stop on a short. Like, just put yourself through those paces. I think you'll be happy you did. If it's needed, it might not be needed, but even if it's not needed today, like, I think we're seeing that this market, we see that it's not going up forever. Like, losses can come quick, and you got to be prepared. Even saying I wasn't prepared enough, and I do this. I'm familiar with it, but the market is sending some tough signals, and that's where we started. Tough enough to fool the smartest hedge fund out there. So that's why that's what we always say. You want to have all your tools in your toolkit.
And it'll be very interesting to see what you decide to do. We could get into the model portfolio now. Catch you on the other side in the Prospero laboratory. Everybody, stick with me. George will be right back after switching over. We'll make some live updates to the portfolio. I think that was a great end to the discussion. Hopefully, you guys enjoyed the stream today. Actually, it's the Steven birthday stream. If you guys missed it, I said it in the very beginning, but today's actually my birthday, so I'm happy to be spending it here with all of you today. Let's take a look at the market right now. Hey there, look at that QQQ rising. We are back in the green, working along with the Prospero signals. We saw the QQQ NOS jump in the Prospero app, and look at that. QQQ is now back about 1/3% green. SPY is green as well. Should we sing happy birthday? You guys can sing happy birthday, JC. I won't be joining you, and I'm the only one that the stream could hear. So thank you, Nick. Also, thank you, Jill, for the birthday wishes. Appreciate you all. Our Prospero community. While George was actually finishing his last thought there, I was thinking to myself, the highs are more enjoyable, and the lows are easier to go through when you have a community of people that are here for you, and that's what we're trying to build with this Prospero community. So it's our Discord. We have a bunch of great people in. These live streams are great. You get to hear our thoughts, and it's very, you guys see what we talk about. We talk about anything basically. So I think we're building a great thing here for people that are looking to be invested in the market for a long time. This is just the start of the good Prospero community we are building. I want to take a look at the QQQ and SPY net option sentiment now also. So the QQQ is still up there at 38. So it just updated. It's up to 41 now. So we are officially, for the QQQ, over the bull bear line of 40. The SPY is not seeing any love though at the moment. It is still down there at 0, where it's actually been most of the time now recently. We had a brief pop up to all the way up to 16 in net option sentiment on November 12th, but basically, besides that, for its entire time series graph, it's been pinned at 0. So people are positioned pretty cautiously outside of tech at the moment, at least. I'm wondering if we'll see like the Dow Jones underperform and the SPY underperform the QQQ if we see the signals stay this way in the coming days. Let's get some updates at how some of the stocks are moving here. Feliz cumpleaños, Steven. Thank you. Standard deviation. Appreciate you. All right, let's take a look at the Mag 7 again. When we looked at the beginning of the stream, it was just Google and Tesla in the green. So we'll see if we've had anything switch. Apple red, Amazon red, Meta red. Nope, nothing changed as of right now. We'll take a peek at NVIDIA. NVIDIA is still red as well, but things are looking like they're trying to fight back at least closer to the green on the day. NVIDIA is down off the lows. A lot of other stuff is as well. Let's see. Let's go look at the VIX as well here. The VIX is still over 20, so we're in a pretty volatile moment still in the market. When the VIX is rising, the market can make big moves, and it's expecting increased volatility. So we are not out of the woods just yet. We will see what George decides to do on the stream. If anybody missed it, we won't be live Wednesday. We typically are, but just one stream this week. So you'll have to catch us next Monday when we're back live on the streams. Neil said, yup.
Happy birthday, Steven.
Thank you, George.
Officially on the stream. I did say it to him earlier, but now the stream can hear it. But any special plans?
Just going out to dinner tonight to a local. If anybody's familiar with North New Jersey, Nellie's is a very good restaurant. It's like it's not like a fancy restaurant, but I like it, so we'll be going there later.
Nellie's?
Yeah. Good, like
What
Italian
kind of
food.
is it?
Yeah, Italian.
Okay, let's get this letter. Brent is out this week, so I am. Oh, Steven, you can probably help me input these positions. Although maybe not today. We got to do the. We're putting together the merch for the crowdfund people. Might have it pretty soon. I will share my thing in just a second. Okay. Oh, I need to get my title up. Okay. Where are we at QQQ and SPY?
QQQ, we're at 36 now, and SPY still 0.
What's going on, Steven?
You mean reading that?
Yeah.
I was going to read it, but then sometimes I miss time, and I thought you would probably like scroll away, but then it kept getting longer. I was like, oh, I was stuck in a loop of I should start reading, but it's going to end soon. I could catch us up. I'm reading the prior one, everybody. We will swing a little more bullish in case this is the sign of a turn coming, but we will say that we have had blips up like this recently that did not last very long at all. Large caps are having the best days, but nothing is standing out enough to prioritize too much. Does look worth it here to look to add communications, healthcare, and utility bulls.
What's the market doing today?
Target financial bears. Right now, the QQQ.
Oh, it's up a little. I was like looking at it.
Yeah.
Bad title.
We're seesawing. We're back in the green, and this QQQ and SPY, Dow, and Russell are red still.
I think that's a better way to describe it. A little too flimsy. I think I put the wrong date on the letter. Okay. Oh, that's all the longs we have? Oh, we really did a big trim. Whoa. Netflix. What the hell happened there? Someone is not happy with Netflix.
They previewed Stranger Things early, and it stunk probably.
$35. Okay. We did a good job trimming this. Making my life easier. Okay. I don't think I've seen. I think Netflix, like towards the end of last week, was high end. I don't think I've ever seen something in the highs and then the lows.
I'm wondering, did Netflix just split their stock? Is that affecting it, maybe?
Oh,
I see they're
Could
trading at
be.
111 per share right now. I think they were much higher than that.
Yeah, it could be. Okay. That could be what we're looking at.
Yes, we got a 10-to-1 split confirmed by the chat.
Okay. That'll sort itself out then. I really want that much. Do I want all of those? Yeah, I think I do. Okay, look at all this. Oh, gee, okay. Do I want to say, yeah, sure. What's going on with WM? Okay. I feel good about this. Let me just. We do have a lot of financials. All right. I'm not. Okay. Okay. This is good now. Okay, now let's just take a quick look-see at this. Oh, that is close coin. I really need to get the hell out of that. I'll give it the day. I should have gotten out of it Friday. That's really what I should have done. What's going on with GLPG? All right. Carnival, FHB. All right, what is the diversification? All right, I could do cactus. That's interesting. WHT or WTTR. Water solutions. No. Jazz. Oh. Okay, they like reported earnings or something. Kind of like Temus. Yeah, we're gonna get. Okay. All right, that's done. Then we are going to send this out at 5:30 or 12:30. I don't know why I said 5. Oh, maybe we don't need to get out of Netflix now, actually. Yeah, what's it doing today? Yeah, or not. We're holding strong. Give the metrics a chance to work themselves out. Okay, we're done. Any questions?
We actually do from Nick. How do you feel about AI being able to rewrite its own code?
I feel like it's very dangerous. I feel like that's I feel like that's on the step. That's an important step in us losing control of it. But in my estimation, we've already lost control. I don't think anyone is all that interested in maintaining control. So yeah, unfortunately, that's the direction that we're going. But it's dangerous. Like it's getting more and more dangerous. And I think we don't really know how smart it is. And people being like, well, there's rules, blah, blah, blah. Like, we don't know if it already knows how to bust out of that. We don't know if it's already copied itself an infinite number of times in a distributed way. I think we're past the point of no return. But it was not smart. Like, if we're talking about security, it was not smart that we took that step. But I do also think that um, that there is something to the idea of like other countries are doing it, we can't fall behind the progress. But I think there's a way to balance that better than we're thinking about. And I think there would be a way, you know, if we were better at diplomatic solutions to like talk about what are reasonable safeguards that we all would take. I mean, I know that there's not um, a lot of trust there, but for example, I think it would be reasonable to say there would be an independent AI board that could, investigate the dangers of this. That was like a multinational thing, but we don't cooperate that much. So it's like kind of like saying, it's kind of like saying like world peace.
One other question from JC. I don't know how in depth you want to get into it now. We could save it for next stream if you want, but asking about the hold times between the trading and investing letter picks. He'd expect them to be with the trading one shorter than the investing letter, but I guess it's not the case.
So the thing about it is that because since it's a larger portfolio, we can be a little more patient. That's what it is. Like, and we're signal driven because it's a smaller portfolio and it's high conviction. We've talked about this a lot of times. Like what we just did today, like like GLPG, switched out and we rebalanced the portfolio a little bit. That'll create faster churn times because a lot of times what we'll never do in the trading portfolio is say like, okay, a stock is 80 momentum score. Or sorry, it's like 60 momentum score and we're cutting it out, right? In the investing portfolio, we can say that like, I like this tech stock more than this other one, and we will substitute out just a stronger pick. Even though the signals are just fine on the pick that we're booting, we just see a better setup. And that's the difference. And that's why there's more churn. And like we talk about this all the time, nobody should feel any pressure to make that switch. Nobody should feel any pressure to, pick the same stocks as we do. We're just demonstrating what we view as the best application of the signals and the strategies around that.
Well, I think that was a great answer. JC's giving you the thumbs up. Only other thing I see is good discussion, guys and gals, from Mario. So I think that's it for today. A great
Thanks,
stream.
everyone.
Cross the hour-and-a-half mark. Thank you, guys. We'll see you back here next week on another live. Best of luck to you all.